wait for it to break out before hopping on board. Okay? Now that's not necessarily a bad thing, because sometimes these markets will break out quickly. Like in this case, this broke out quickly and then pulled back. Okay? So if you miss the breakout the first time, you always have an opportunity to buy a breakout. You know, we talked in earlier webinars about what happens during those breakouts. And sometimes you're going to get a breakout that's going to be rather quickly, and that depends on the momentum. And other times you're going to get a chance where it goes up and then pulls back into a retracement zone. So if I blow this back up again, you'll see that in this case, when you get a breakout to the upside here, it pulls back, and oftentimes this retracement point is about 50% of this last rally up. So you could see that from a swing chart trading standpoint, that this market did offer that after this initial breakout failed to hit the target zone, that it did pull back and give you an opportunity again. You'll see two things happen. You'll see a pullback into an extension of this breakout point, this extension of this resistance line, and other times you'll see it pull back to a percentage retracement of this last swing. So that's important to know. And it's also important to know whether you're a momentum trader. If you're pure momentum and you see this breakout, then you're out when that momentum shifts. If you tend to be a swing trader, then you let the market identify which way it's going to go and then try to buy the pullback of that retracement. Now, there's risk reward in both of those. Of course, the risk is that if you are a swing trader and want to buy pullbacks, that you run the risk that the market's just going to keep going and you never get the chance. Okay, that's fine. As long as you know those parameters going into the trade. And then if you're a momentum trader, then what happens there is that if you don't get out after the momentum shifts, then all of a sudden you're in a position where you're going to have to watch the market closely and figure out whether you want to trade the swings or not. And that's a dangerous situation to begin, because a lot of times traders will load up a big position here looking for a big pop, thinking they're going to get out soon. And if they miss their exit, then they end up holding a big position that...
I have a question.
Yes, Yvette, fire away.
Yes, I'm just looking at our attendees' questions, and Maureen Geiger, I just wanted to find out from you. She says, how long to hit the target? Did you say it would take as long as it took the pattern to form?
That's a general rule, but it's really subject to momentum. This looks like it's got a small time frame, but you're looking at a 15-minute chart here. It depends on momentum. It's not really tied to how long. In other words, 193, 194 15-minute periods is not what it's expected to hit in. When you get a tight range like this on a triangle, sometimes you can just get a straight up move to it. So I don't think there's, you can say conclusively that it's going to take 194 time patterns to hit it. What happens is that these patterns tend to move a lot faster, especially when you're looking at a 15-minute scale. So again, it depends on the volatility at the time of the breakout. All right, does that answer that question? All right. So what you have here is, as we talked, you need to have when you're doing these breakouts, you need to have your filtering criteria in mind. You have to keep, it's like a checklist. You need to know what your price ranges are that you're trading, what the trend change is, what's your minimum price length that you're looking at. You want to make sure that you've checked on your quality indicators also. So all these things come into play when you're dealing with these breakouts. So in this case, you want to be, when you're looking at like minimum price range search, okay, you want to make sure that when you're dealing with particular stocks that you filter your search to a minimum price range. So you don't want to have, for example, some of these markets, if you search all stocks, you might end up with a lot of penny stocks, and you might have ranges, stocks ranging from $1 to 100. So one thing that you want to do is that if you do search equities using TradeStation or using the Auto Chartist and the trade search, you want to make sure that you use a price search, that you're not looking for stocks that are in pennies that could elongate the search or confuse you. You also want to make sure that you have the minimum clarity set up when you do a search. You want to make sure that you're not. You want to make sure that you're looking at like 6 or higher on your quality indicators. You want to make sure that when you do minimum initial trends, that you want to set it to something 6 or higher. And I'll show you that in a second when I go back to the live screen. But 6 tends to be, that's above, first notch above average on your searches. So you want to make sure you have some good quality stuff. Same with volume. You can search for volume on equities. You want to make sure that you have volume, that a stock that's active. You don't want to have a thinly traded stock. The more active the stock, the higher the volatility, the higher the volume, tend to get better patterns. Because let's face it, these patterns all will work better when there's some muscle behind them. You also want to make sure that you check your uniformity, because high uniformity means that the market has equidistant tops and bottoms, that there's some swing and there's some pattern to the tops and bottoms, that they're not just random. And when you're dealing with clarity, you have to remember that a high clarity number means that the market's clean, that there's been some very clean swings formed, that it's not very noisy, it doesn't have a lot of gaps. Initial trend has to do with how was the market behaving before the trend was formed. Was it a strong uptrend before the pattern was formed? Was it a strong downtrend? Is it going to be a continuation? Is it going to be a reversal pattern? All those come in it, and your searches, depending on how you search these. Maximum or the minimum breakout. You want to see that you have strong momentum behind it, so you want to set that high. And you also want to know that when you're dealing with these indicators, that clarity and uniformity deal with what's going on inside the pattern, where initial trend and breakout are what occurs before and after the patterns are made. So if you pair these up, if you search for example, a really high, maybe a 6-bar, 7-bar initial trend, try to pair that up with a 6 or 7-bar breakout trend, and you tend to get better pattern searches. Okay, here's for example a stock that we looked at from Australia, where we put a filter on it where we're looking at $30 or more. So you'll guarantee that your stocks, if you're looking for $30 stocks, that when you use these filters, you're going to get the stocks that you're filtering. Here's where we've set this indicator to select high initial trend and high breakout trend, and you can see here's an example of what a strong breakout was, the size of this bar and how it hit the target price. So these are examples of how you can pair initial trend and breakout trend. Here's an example in the past where we picked a bearish trending pattern, where I went in there and I searched for patterns that were bearish, and I also picked a trending pattern such as the rising wedge. You know, so there are all kinds of different ways you can filter it, and one of them is this, for example, this bear and this bull trend filter. Okay, you can go to this chart here, and as you're putting together your work, we can go to this filter, and I could select, for example, on this FX Majors, I can go in here and I could have it select only bullish patterns if I want to look for. Okay, as I mentioned, I'm searching for non-trending patterns already, these triangle patterns, but I can save myself a lot of time. If I know, for example, the theme of the day is bullish, I can come in here and I can select only bullish patterns, and you can see that this pattern is going up, so my search goes down quite a bit. because all I'm looking for now are these triangle patterns and these other patterns. And you are getting only those patterns that are non-trending, and you're getting only those patterns that are pointing to the upside. Okay, so that's why it's important to filter. So when you do look for your setups, if you have a bias, use it. Use the bias. If you there's a fundamental news that's telling you that a certain currency is going to have a bullish trend, then by all means use that search and use that setup to find those kind of markets. The key is that you want to study and experiment with all these different setups so that you can find the right setup that you like that identifies the kind of market that you want. That's how I discovered working with the triangle, that I like to work with the triangle because this is the way I like to judge breakouts. But it may not be suitable for you. You may want to find something else. All right. Now, what we covered here was the key elements of the trading decision process. All right. And that is, and if if you're confused, I'll review them. If you are looking to make a trading decision, you need to have a process in place. You need to include a setup. You need to include and define your trigger. You need to find an entry and exit price, and you need to have trade management. And finally, you want to trade based on what the market's doing now, not what you think it could do in the future. So you want to take the setups as they come up, and you want to remember that you want to take a good trade that's got a good risk reward, and if you're wrong, just get out right away and start over again. So that's one of the keys, is that you want to eliminate that long or that big loss or hanging on to something. Believe me, AutoChartist has got plenty of trades coming up depending on the activity for the day, and so as these develop, you want to make sure that you're not married to one particular position. If it hits a target and that's your exit, then get out and move on to the next one. That's probably the best advice I can give you. Now, moving down this selection for these bullish markets today, you can see that even in like the British pound, US dollar, that was early this morning, that we had that same triangle formation. This one here had a pretty decent or above average initial trend, and that initial trend is this part of the chart. How was the market going up to here? I get a lot of questions and emails and comments, and they'll say, yeah, but the trend was going down and you said the trend is up. Well, what happens is the initial trend is, if you click this button on here, you'll know that the initial trend is defined as the strength of the trend prior to the pattern formation. So here's where the pattern forms. It starts here and it ends down here. Okay, so this is what the initial trend measures. So if this was a strong move here, then what it's saying is that after this movement takes place, that it's going to pick up, or it's going to continue that initial trend. And that's how you read that. So when you see a highly rated initial trend, then you should look for a trade that has a highly rated breakout. So basically what we're looking at here is strong initial trend, 7 or better on the rating, and the market, change color there for a second. If the market is going into this non-trending pattern, then once it completes this triangle, it's going to pick up that same continuation of that same pattern. So you can see here from this example that you had a strong initial trend, you had your triangle, then you had your breakout. And that's what you want to look for. You want to have, if you're going to work with strong initial trends, you want to make sure you have strong breakouts also. So that's what's happening in the British pound right now, and that's an example of how I use it. I look for a strong initial trend in my setup, I look for a triangle, and then when I get my area here where this market can break out, then I just wait for this particular move to take place. It's not a guessing game for me. I have my patterns down, and I try to eliminate any kind of noise. I try to have strong clarity. I try to have strong uniformity, but I don't filter so much that I don't take out a lot of trades. If I filter too much, then I'm going to end up with